Hey investors, welcome back to another episode of Vishal Vealth View. Today we got a jam-packed episode of things to discuss, so without wasting much time, let's start this episode. The trade war is escalating between US and China. Trump, after announcing 245% tariffs, have also restricted S20 chips being exported to China. This chip is crucial for development of AI and LLM models. Now, as this trade war escalates between US and China, Nvidia is caught between these two countries. And in past 6 months, its stock has almost corrected by 30%. Now, this comes in the backdrop of some amount of overvaluation in the stock and some amount of hype in the stock. But again, this is a disruption in the supply chain that have existed for decades. To prepare for this disruption, I've already started selling my US position, specifically in Nasdaq 100 ETF and FANG ETF. I've cut down my position in the beginning of April before reciprocal tariffs were even announced, and I moved that money to India Defense ETF, which is to some extent going to be protected from these trade wars, and government of India will have no choice but to spend more on defense when Europe, China, Russia, every other country around us is spending more. I'm closely tracking how these trade tensions develop and how will it impact the entire semiconductor supply chain. The reason is I've been invested in this company called Anantraj, which is venturing into a data center business, and semiconductors are one of the crucial component of setting up the data centers. So I'm still waiting for Q4 results for Anantraj to come out to take any further decision. But I'm sure this trade war is going to impact this investment a lot. Along with that, we'll be discussing the Q4 results for Taril. Now, this stock has been rallying since last 6 months during a time when entire stock market has corrected a lot. This stock did not see a huge amount of correction during the tariff war that was started by Trump and has been rallying since then as well. The stock has soared more than 4% in a single day after the Q4 results are out. So that's why it is worth taking a look what is happening in this company.
Do you recognize this style, this bag? Of course you do. For the past more than 30 years, we have been ODM factory for most of the luxury brands around the world. Gucci, Prada, Coach, Louis Vuitton, you name it. But for this, I am not proud because we were only making our wages. The profit margin for the people who are actually making the bags are very low. Why don't you just contact us and buy from us? You won't believe the prices we give.
Now, what you just saw was China's latest tactic in this trade war. They have launched a massive TikTok campaign exposing the luxury brands like Birkin, Lululemon, their costs, their margins, and how little are they paying these OEM manufacturers in China. They're going to the US consumer directly and asking them to buy from OEM manufacturers in China, giving them visa-free entry whenever they want to go shopping in bulk. And this trade war is about to escalate. Between all of this is Nvidia, which faces a $5.5 billion charge as US added restrictions on sale of S20 chips to China. Now, these chips are really important for R&D in AI and specifically the LLM models. As these export controls come into play, CEO of Nvidia has been collaborating with China after his recent visit. He is thinking about taking the company in a direction where they collaborate on products specific to the Chinese markets, which bypass US restrictions. And if this is the way the company is going to run, and this is the direction that CEO is going to take the company, it will be really interesting to see how things play out amid this growing trade war and amid this complex supply chain that's tangled between these two countries. Caught in the middle of this crossfire is Nvidia's valuation, which has corrected by almost 30% in the last 6 months. Now, this comes in as investors are unsure about how the new supply chain for semiconductors is going to look like when these two biggest trading partners are at odds with each other. Is there a deal in place, or this trade war is about to escalate? And considering an important company like Nvidia that's important for such a cutting edge technology and your military, it will be really hard exporting the key trade secrets or the key proprietary algorithms or technology to a rival country. So you might see fluctuations and volatility in this particular stock and any company that's associated to supply chain of semiconductors in the future. Now, I've been making significant changes because of this particular trade war. I've cut down my position in Mirai Asset and NYSE FANG ETF. I am still sitting on profit, but I've booked some amount of profits in the past. Same with Motilal Nasdaq 100 ETF. I've almost sold half of this investment, and I've moved this money to um, Motilal Oswal Defense ETF. This has given me a return of almost 5% since I've invested. This is a sector that I think is going to do secularly well around the world because more countries are becoming inward looking. They are thinking about spending on their money, thinking about spending on their defense. And as Europe, China, Russia, everyone is spending on defense. There are war going around the world. We as a country will have no choice but to spend more money on defense. Now let's talk about this company called Transformers India. It came under my radar when I was going through Q4 results for various companies. And this company has given a run up of almost 4% after the Q4 results are announced. If we take a look at the overall picture of this company, it is headquartered in Ahmedabad. It specializes in power distribution and specialty transformers, and it is catering to sectors such as power generation, transmission, and distribution. Specifically, they are catering to electrical components and electrical component distribution. They have a market cap of almost $2 billion with a short-term debt of almost 200 crores and overall debt of 283 crores. They're trading at a PE of 77 right now, with net profit margin standing at 13%, which has been growing over last several quarters from 4% till 13%. The current sales for financial year 25 is at 2019 crore, and it exceeded the expectation of 2000 crore that's given by the company in the past. They have raised almost 600 crore in last 2 years from the public market, and the promoter holding right now sits at 66%. That means they are still the majority shareholders of the company. The profit after tax of this company looks at 216 crore in last financial year, and it's a 4x increase from financial year 24. That means the company is in a clear trajectory of growth and expansion. The company has been taking several initiatives. They have been in three direction. One is capacity expansion, second is backward integration, and third is capital expenditure. In terms of capacity expansion, they are planning to increase their capacity from 60,000 MVA to almost 75,000 MVA by financial year 2026. Along with that, they are also planning to achieve a backward integration process by which all of their uh, supply chain dependencies on external suppliers will be reduced. And to do that, they have recently acquired some companies which are going to provide them those components and materials that they need for their production line. Apart from that, they are executing on the capital expenditure process. They are buying fixed asset. They are expanding their capacity for the sales and the revenue projection that they are looking at in the future. Now, what does the future outlook of this company look like? The future revenue projection. For financial year 26, they're saying they'll be able to do 3,500 crore. And for financial year 27, they'll be able to do 5,000 crore. Now, they are saying that in 1 year, they'll be able to grow their revenue by almost 70%. And in 2 years, they'll be able to grow their revenue by almost 150%. This is a really ambitious target. And I think this will dependent on execution a lot. And that's one of the risks for this particular company. It can be susceptible to supply chain disruption. It will be highly dependent on the execution of the capex and commodities and the price fluctuation that happens as this trade war escalates. So I'll be really wary of investing in this company at this stage. As of now, my answer in this company is still going to be no, or just see what's happening. But there's a good opportunity for this company in the market, and it is trading at a really high valuation as of now. So my strategy is going to be wait and watch for some amount of time and then probably start building some position. But again, investor, this is not an investment advice. Please do not invest your money in this company just after watching this video. You should always consult your financial advisor before you make any investment. If we see the latest results by the company, there's a massive unexecuted order book of 5,000 100 crore, which was almost 3,700 crore by in the month of January. And we have seen a massive order inflow of almost 4,500 crore that they are planning is going to get executed in next 2 to 3 years. And to large extent, majority of this money is going to come from one single customer, that is Gujarat Energy Transmission Corporation, GETCO, and that order is almost over 740 crore. Now, the negotiation number again, I will not pay a lot of attention to, but clearly there has been an increase in demand in the product of this company in last 2 3 months. So, what is my conclusion regarding this investment? Let's just say if everything goes according to their plan, by financial year 2027, they'll have almost 5k crore of sales, and let's just say if they maintain the same profit margins, then they'll have a PE of approximately 33. And the future growth from there on, uh, I cannot picture, and I do not know what it will look like. They have a high revenue dependence on single customer. I feel that's also a risk. If the quality does not meet the certain requirements, then competitors can come into play and take on these customers, and this will always be amplified in the backdrop of high valuation. So as of now, I still have not made my mind whether this is a right bet from a business point of view, because this is a completely new industry to me, and I'm not sure what are the dependencies that this industry or this company will have on the remaining supply chain. So I'll probably wait and watch in this company right now. That's it for today's episode, investors. If you enjoyed this video, do hit the like button because it helps reach this video to more users, and subscribe to this channel because I'll keep on posting more informative content for you.